Hi everyone. In my previous video, I introduced the US sports betting market. Today, I'm going to take a deeper look at a company called DraftKings. So last time I said DraftKings could be an interesting stock to watch in 2026, especially with the World Cup 2026. But today, I want to go one level deeper. If you love sports, you've probably heard of DraftKings. Maybe you've seen their commercial during NFL, NBA games, or March Madness. DraftKings is trying to become something much bigger than sports betting company right now. They are building an online casino and digital gaming ecosystem inside your phone. That's why I call this company Digital Vegas. Not a casino building in the desert, but a digital entertainment platform that people can use anytime, anywhere. And with the first quarter earning comes out on May 7th, which is this week, I want to break down DraftKings ticker DKNG and explain to you. This is not a financial advice, this is just my research and my personal opinion. DraftKings is becoming a gaming platform, not just a company that makes money when people bet on sports. The bigger idea is this: one user, one account, one wallet, and many different products. One more time: one user, one account, one wallet, and many different products. A customer might start with fantasy sports, then they try to sportsbook, then may they try iGaming, which is online casino. Okay, let's see the business model now. DraftKings has 5 main growth engines. First, online sportsbook, which is the sports betting. This is the product most people already know. You bet on sports. Second, iGaming. This means online casino. So things like slots, blackjacks, any types of the casino games and live dealer games you can play. Third, daily fantasy sports, also called DFS. This is where DraftKings originally became famous. Users build fantasy lineups and compete based on real player performance. Number 4, lottery and jackpocket. DraftKings bought Jackpocket, which gives them a way to enter the digital lottery market. So everybody can buy lottery through the online. And lastly, prediction market. This is the very new and interesting area. Instead of only betting on sports, users can trade on real world event like Trump versus Joe Biden, and they can bet for whoever win. So DraftKings is not just one product anymore. It is trying to connect multiple forms of gaming and entertainment into one platform. Okay, let's look at each business models. Let's start with the biggest engine, online sportsbook. This is still the core business. When people bet on the Super Bowl, March Madness, NBA playoffs, UFC, soccer, any types of sports, DraftKings makes most of its revenue. In 2025, sportsbook revenue was around 3.86 billion, which was about 63% of total revenue. So yes, sports betting is still very important, but here is the key point. Sportsbook is the scale engine, not necessarily the highest margin engine. Because sports betting depends on the game result. Sometimes the house wins more, sometimes bettors win more. This is called sports outcome volatility. So sportsbooks gives DraftKings huge scale and customer engagement. But the next question is, where does the higher quality profit come from? That brings us to iGaming. Next is iGaming. This is probably the most important part of the DraftKings story. iGaming simply means online casino. And this business is very important because sports are seasonal. NFL games are not happening every day. NBA and NBA, MLB have seasons. Big events comes and go, but online casino can 24/7. users can play blackjack on Tuesday night, or they can play slots during the lunchtime. They do not need to wait for game to start. That makes iGaming more consistent and potentially more profitable than sports betting. In 2025, DraftKings generated around $1.8 billion from iGaming, about 30% of total revenue, and margin was really great. If DraftKings can move more users into iGaming, the company can improve profitability over time. Sportsbooks bring the crowd in. iGaming can help turn that crowd into higher margin revenue. Next, daily fantasy sports. Daily fantasy sports is where DraftKings first became popular. Users build their own fantasy teams and compete based on real player performance. Today, DFS is not the biggest money maker for DraftKings, but it is still useful because it brings in serious sports fans. And once those users are inside the DraftKings app, the company can later introduce them to sportsbook, iGaming, lottery, and other products. So DFS is not the main engine anymore. It is more like an entry point into the DraftKings platform. And lastly, prediction market. Now let's talk about the most interesting but also the riskiest part, prediction market. They allow people to trade on the real world event. For example, will the Fed cut interest rate? Who will win an election? Will Bitcoin hit a certain price? Or like which team win a championship? It is almost like a trading stocks, but instead of companies, people are trading event outcomes. This could be a huge opportunity for DraftKings because it expands the company beyond traditional sports betting. And here is why this matters. In states like California and Texas, it's still like sports betting is illegal in those states. But they have the biggest sports market in the United States. So there is something DraftKings still need to figure out in the regulation part. And currently it's a small business, but potentially very important for the future. If this can be major part of the business, DraftKings can make double and triple income easily. And let's see the last year revenue. DraftKings had a solid 2025. They made about $6.5 billion in revenue and $620 million in adjusted EBITDA. But for 2026, management guided $6.5 to $6.9 billion in revenue and $700 to $900 million adjusted EBITDA. To the market, this looked a little conservative. That is one reason the stock is under pressure right now. But I don't think management is saying the business is getting worse. I think they are lowering expectations on purpose. Last year, expectations were high, and when the results were not strong enough, the stock got punished. So this time, they may be setting a lower bar first. In simple words, lower expectations now, possible earnings surprise later. That is why I don't see this guidance as purely bad news. And let's see the competitor. The biggest competition is the FanDuel. FanDuel is owned by the Flutter, and honestly, FanDuel may be the stronger business today. This company is the leader in the US online sports betting market currently. FanDuel is probably the higher quality operator right now, but the investment angle is different. Flutter is a global gaming company. It owns the FanDuel and headquarters is in the New York City, but is originally from the Ireland company. So DraftKings is more of a pure play US digital gaming market. So if the US market expands, DraftKings may react more strongly. FanDuel may be better business today, but DraftKings may offer higher upside if the US sports betting market grows fast. So instead of the question which app is better, the better question is what kind of investment exposure do you want? Stability and global diversification, or if you believe US sports betting market's potential, that points more toward DraftKings. So we've talked about business, but for me the first thing I care about is this: who's driving the car? Even a Ferrari would crash if the driver sucks. And the main reason I trust DraftKings is because of Jason Robins. This guy isn't just a businessman, he's a sports geek. When he was a kid, he didn't care about the pictures on baseball card. He only cared about the stats on the back. He once joined 200 fantasy leagues in a single year. He obsessed with data. And his dad did real estate and his mom was a math teacher. So he's basically a mix of business smarts and math skills. He also went to Duke University and studied economics and computer science. He's quite smart. What I love most is how he handles troubles. When the government tried to shut him down early on, he didn't run away. Instead, he went to the most powerful people in sports, like the owner of the New England Patriots, and made them investors. He basically said, instead of fight me, why don't you join me and make money? That's a genius move. And when the company was losing money, he told everyone on social media, you will regret not betting on us. He's got the brain, he thoughtfulness, and the passion. When a guy like that is in charge, I don't worry about the stock price going up and down. I see it as just part of the journey. So here's my tip. When you buy a stock, don't just look at the chart. Look at the person in charge. Who are they? Who are their friends? Because if you see only the numbers, 10 years ago, 15 years ago, Intel, Nokia numbers was good. But if you invest in those companies, you will not make any money like today. DraftKings is strong because Jason Robins built a massive safety net of data and powerful connection. That's the real value here. Back in 1931, gambling law was passed in Las Vegas. People thought Las Vegas was gonna be the big city very soon, but it took decades for Vegas to become the massive entertainment machine we know today. The difference now is that digital platforms move much faster. DraftKings does not need to build a casino resort in the desert. It can scale through cyber world and one connected wallet. Also, when we look at the stock chart, the current setup looks very similar to 2022. Back in 2022, DraftKings hit a high at 2021, then dropped all the way down before the World Cup. But after World Cup, the stock rebounded sharply. Now we are seeing a similar pattern. The stock reached the high near the end of 2025, pulled back and is currently under pressure. So the big question, can this stock rebound strongly again after World Cup? Just like it did 4 years ago? Let's keep watching. Thank you for watching my video today. If you found this video is helpful, please hit the like and subscribe to the channel. I'll come back with a more interesting stock story. Thank you.